Is Islamic banking any different from conventional banking? Is there a real difference between the two? Or is it the same thing with two different labels? What do you say? If you say that Islamic banking and conventional banking are the same, you are not alone. In fact, 1400 years ago, a similar statement was made. Quoting from the Holy Quran, that is because they say trade is but like riba. However, the verse goes on to clarify this misconception by stating that, "But God has permitted trading and forbidden riba." But what has trade got to do with banking? This brings us to the most significant difference between Islamic banking and conventional banking. While the central role of conventional banking is to operate as borrowers and lenders of money, the central role of Islamic banking is to operate as a trader. Therefore, earnings of an Islamic bank is a result of trading activities unlike a conventional bank. Such trading activities includes sale of commodities, leasing of assets, providing services and investing into business through varied relationships. The relationships formed with customers bring out another key area where a marked difference is seen between Islamic banking and conventional banking. Conventional banking predominantly revolves on a single type of structure and relationship, which is of a lender and borrower. However, Islamic banking operates on a multitude of trading structures and relationships, some of which are as follows. In a sale-based structure, which is called murabaha, the relationship is of a buyer and seller, where earnings, if any, comes from the profit on sale. In a rental-based structure, which is called ijara, the relationships is of a lessor and lessee, where earnings, if any, come in the form of rent. In participation-based structures, which are called musharaka and mudaraba, the relationship is that of a partnership where earning, if any, comes from profit sharing. In an agency-based structure, which is called wakala, the relationship is that of a principal and agent where earnings, if any, comes from fees. Accordingly, the key point to remember is that to understand the true essence of Islamic banking products and how it differs from conventional banking, it is essential to understand the structure and relationship on which the product is based. Once the structure and relationships involved are identified and recognized, the difference between Islamic banking and conventional banking becomes clear and evident. Now, let's summarize. Don't make the mistake made by people 1400 years ago. Why? 1. Trading is different from riba. 2. Islamic banks are based on trading, while conventional banks are based on riba. 3. Islamic banking earnings are a result of trading activities, which come in the form of profit on sale, rent, profit share, or fees. 4. It is essential to understand the structure and relationships on which an Islamic banking product is based in order to realize its true difference. And one more thing. Islamic banks are not only regulated by the central bank, but also regulated by an independent Sharia supervisory council, aided by an in-house Sharia supervisory department, strengthening the bank's governance and social conscience. So next time you meet a person who believes Islamic banking and conventional banking are the same, you can help him see the difference. Amana Bank, it's your bank.